That looks like me. Add. That looks like me.
Good morning, good afternoon, good evening, depending on where you're at in the world today. Saturday, it's that time. You're going to have to mute me, Diana. On your end? Okay. It's that time. It's Saturday, My Mortgage Town Live. I'm in a very good mood. Had a very fun family night last night. Drove down to the beach, had a nice dinner. We're going to talk about that in a minute. But since we already have Diana on the screen, good morning, Diana. How are you?
Good. How are you this morning?
I'm doing excellent. Diana is a friend of the YouTube channel, a real estate agent, one of the best real estate agents in Southwest Washington. We feature her listings all the time. She's been on Realtor Spotlight in the past. So she's going to join us, and she doesn't know exactly what we're going to talk about yet. But it's going to be fun. If anybody is watching, can you fire something in the chat? Let me know how the audio sounds. Make sure our music's going, everyone can hear Diana, everyone can hear me. It's always fun trying to put these Realtor Spotlights together. We got so much going on echo. Let me see where the echo's coming from. All right, how's that? I think I know where the echo is. Everyone just bear with me. Did that solve the echo? Okay. Mrs. Steinman thinks it's better. Hopefully it's better. So we're going to go ahead and get started. All right. And Diana, you can still hear me? Now Diana cannot hear me. Okay, we're good. So last night, we had a nice Steinman family night, drove down from the beach, and we're having dinner at one of our favorite restaurants in Astoria. At the Supper Club. If you guys are looking for a good restaurant in Astoria, the Supper Club's one of our favorites. They had a guy playing guitar, excellent food, excellent service, very good cocktails. And we're having dinner, and I noticed sitting across the room from us was a nice looking couple. They looked like they were not from town. And then as they left, they stopped by the table, and they saw that we were with our daughter and asked if we were local here. And we explained, no, we have a home in Long Beach. We travel part-time. And they were relocating here from Illinois. So this episode, this live stream today goes out to Christine and Mark. Very nice couple. We had a nice conversation about relocating. And that's one of the reasons I wanted to have Diana on. It just kind of all worked out. Diana and I have been talking all week about 50-year mortgages. So we're going to dive into that. We're going to dive into Mark and Christine's scenario and take a look at what it looks like to relocate to Astoria, Oregon. I have a really cool house picked out. And what it looks like to do that today. In today's real estate market, you know, they mentioned one of the things they looked at when they came here was groceries. The price of, you got to move your camera back the way it was, Diana. The price of beef and the price of eggs is the two things they compared. So we'll talk into home affordability, what it looks like for someone relocating from Astoria here in just a minute. All right, let's get to some housekeeping items. Oh, good morning, Christine. You're here. We're talking about you. I hope that's okay. All right, some housekeeping items. We're going to start off with interest rates. All the interest rates we use on this live stream come off of this website. My Mortgage News Daily is my go-to resource for all things interest rate related. Today, this is yesterday, the national average, according to Mortgage News Daily, on a 30-year fixed mortgage, 6.38. And, interest rates ticked up a little bit this week. We got a little bit of reprieve towards the end of the week. I'm really interested to see what happens next week. Again, the Feds are doubling down on a rate cut in December is not a foregone conclusion. So we'll see. But our benchmark, FHA, this is kind of what we're monitoring every time I do a video, 6.02. The lowest we've seen that in the last 8 weeks is 5.95. So hopefully we break back down under that 6% as we go into the holidays. Jumbo loans, any loan over $818,000. The interest rate today is 6.43. Okay. Every week, one of our friends, Gavin Huckins, sends over some market data, which is what we're going to look at here. Okay. I'm going to have to move Diana for a second. New listings in Southwest Washington down 18%. Guys, I don't like that. Diana, I know you don't like that either. I felt things pick up a little bit this last week and the week before, and you see that with our pending sales. 187 homes went into contract this last week. That's up 14%, but we only added 148 homes. Now, for the past 3 months, it's been trending the opposite, where we've had more listings than pending sales. So a couple weeks of upside down numbers is nothing to worry about, but it's something we will monitor very closely. As rates come down, we want to make sure that there's enough inventory. And I think, and Diana, I'd like to get your opinion on this. As we go into the new year, I see a lot of sellers that are waiting on the sidelines. That as we go into the new year, I think we're going to see our inventory increase as rates come down, because people are realizing that it might be the time to get away from their low interest rate and go ahead and make that move into a new house. Because Christine and Mark are the perfect example of the typical home buyer in today's market. People that are being relocated, people that need to move into a new school district, people that have kids going to college and they're downsizing or they're upsiding. It's buying out of necessity, not necessarily out of want. What are your thoughts, Diana?
I 100% agree. The conversations that I'm having with my sellers right now really are a two-way street. The conversations that I'm having with my sellers right now really are a two-way street.
All right, we have a little bit of an audio
Either
issue,
sellers
a little bit
need
of a delay.
to sell and they recognize that buyers will pay what they want to pay for their home. Either sellers need to sell and they recognize that buyers will pay what
One
they
day we're going to
want
become
to
experts
pay for
at
their
doing
home.
this live streaming with a guest.
Sell and they
Yeah, there you go. Go ahead and mute yourself. I'll let you chime in here in a little bit, Diana. But yeah, I think we're going to see that increase. Okay, so let's go on to our next data point. Every time a real estate agent opens a lockbox on a home, that data is collected. That's what we're looking at here. In Oregon, lockbox activity down 1%, nothing to panic over. But if you look at year over year, the lockbox activity is up. And again, I'm feeling that on my desk. And then for Washington, lockbox activity up 2.5%. Okay. You guys ready for Astoria? The Ring, The Goonies, Kindergarten Cop, They're all movies filmed in Astoria, and I know there's more, but those are my 3 favorite. So this morning, we're going to go to 590 17th Street in Astoria, Oregon, 97103. This is a 3-bedroom, 2-bath, 2145 square foot home built in 1898. This home is listed by Caitlin. I believe I'm pronouncing that right. Let's see what they have to say. Charming Queen Anne Victorian in Astoria's Shively McClure Historic District. Move-in ready. Let's see on the map where that is. Okay, yeah, so you're right across from the Columbia River Maritime Museum. As you go up the hill, right as you come into Astoria, you're close to Safeway. You're about 15 minutes to Warrenton, 20 minutes to Seaside, 25 minutes to Long Beach, Iwaco. So it is a good location. Move-in ready with preserved wood floors. We'll take a look at those. Intricate crown molding and original pocket door. Enjoy peaks of the Columbia River. A gas fireplace. Interesting. I wonder if that's propane or natural gas. Refreshed kitchens and bath. Refreshed kitchens. So is there more than one kitchen? We're going to look at that. And baths and a full unfinished basement just minutes from the Riverwalk, Fort George Brewing, and Astoria's downtown boutiques, galleries, and dining. Experience historic character and modern convenience in one of Astoria's most walkable neighborhoods. Schedule a private tour to experience it for yourself. Okay, let's look at some pictures. I'm going to make this bigger for everybody. Okay, before we dive into the pictures, as it comes to my question to Diana without the audio issues about the inventory maybe picking up at the first part of the year because people are going to put their house on the market. She says seller either need to sell and are realizing buyers will pay what they are willing to pay for their home, or want to sell due to downsize or upsizing and are waiting for the first quarter to pull the plug. I agree with that. Okay. So it's got that classic curb appeal from Astoria. You could picture this in the background of one of those movies I mentioned. White picket fence. Looks like there's a decent sized yard too. Let's see if we get a closer look. Painted cedar siding. It's the same siding we have on our house. Nice front patio. Storm door. And what looks like possibly the original door, even with this like antique lock. Preserved hardwood floors. I love the woodwork around the banisters. Diana, is your audio working now? Do you know? Maybe switch to the audio on your phone so we don't have the delay if possible. I'll come back to you. I know you're dying to tell us all your thoughts on this historic home. It's one of the reasons I had you on. You do a much better job at talking up the house. But I love the woodwork on the banisters as you come in the entry. Okay, interesting ceiling. Those appear to be ceiling panels, but it's hard to tell. Fresh paint. Picture rail. Now, for those of you who are not familiar with the picture rail, we have one in our house, and they're
Can you
awesome.
hear the echo now?
You sound great. We still have a little bit of delay because I think you're getting my audio from the YouTube feed, but the echo's gone. So for those of you who don't know what a picture rail is, it's this trim here, and you get these special hooks that hook onto the rail. Now we're picking up your audio
and you get
echo
these
on your end, Diana.
special hooks that hook onto the rail.
And then you have your picture wire come down to your picture, your painting. It's a really, really cool way to hang artwork on the wall without putting holes in the wall, and really gives it that vintage look. Like how they have the story bridge on the TV. Okay. Now in these pictures, the walls almost look white, but they are just a very light gray. I like it. Very beachy. There's our gas fireplace in our dining area. Looks like there's a ceiling fan. Crown molding in here with the wainscoting, a little sitting room next to the laundry room. Okay, it looks like this has been a converted fireplace. Good morning, Details. Yes, hometown for the Goonies. Okay, nice kitchen. Looks like quartz countertops. And there is a dishwasher. That's one thing you have to look out for in these older homes like ours that does not have a dishwasher. This one does. That's good to see. Okay, so there's our washer and dryer. Is that in the kitchen? Nope, there's a separate utility room next to the kitchen. Here's our powder room. Love the updated sink with the brass faucet. Now keep in mind this house is 2,100 square feet. I'm not sure if that's including the basement or not. Hopefully Diana can get her audio working and we can get her opinion on that. Again, looks like original doors up here. This appears to be our primary. Again, there's that picture rail. Original hardwood floors in here. Bedroom number 2. Details, what do you think this is? Is that one of those electric heating panels? Like an electric radiator? Okay, here is our full bath. So I'm thinking there's one full bath and one powder room. But very nice updated bathroom in here, but you still have that vintage look to it, the penny tile on the wall there, wainscoting. There's your view of the Columbia River. Bedroom number 3. No music on in the stream. What's up with that? Sorry guys, I'm not sure why there's no music on this morning. There's a lot of audio issues today, so we're just going to go with it. Interesting. Again, the front porch. We don't really get to see the backyard. It's because there's not much of one. Well, it's hard to tell. Here's the house. No picture of the backyard. Okay, let me see if I can fix some of our audio issues very quickly. I think we have music. Fire a chat in there if you have the music. Okay, we're going to try some synchronized muting. All right, music's live. Okay. All right, Diana, let's try your audio.
Does that work? Does that work? No echo.
Yeah, we have an echo. Can you turn your speaker down on your laptop? Can you turn your speaker down on your laptop?
It's muted.
All right. Go ahead and give us some of your thoughts. Let me try this. Go ahead and give us some of your thoughts now that you've been on mute for the last 10 minutes. Did you not get any of that?
My thoughts on this home.
Yes, your thoughts on this home, what you think about it, and whatever you want to talk about for a minute. Since we've had you on mute so long.
It's all good. I mean, this home definitely has that vintage vibe. You know, without seeing too much of the details of the photos, and of course, home inspection is definitely needed. Super cute home. You know, Astoria is kind of like that middle ground between here and the Pacific. Well, it is between here and like Seaside or Long Beach or what have you, and it's always a stopping point for tourists. I love the outside of the home. It reminds me of the Full House home in gives me like San Francisco vibes. And definitely be a fun house to have as a vacation home or like an Airbnb or something like that. Super cute.
All right. I'm going to talk to you about 50-year mortgages in just a second. Get your opinion. Okay, so there are many ways to finance a home like this. These are just a couple. Okay. Let me see if I can situate our videos. So if we were, we have echo. Okay, if we were to put 5% down, our purchase price on this home is $519,000. There was just a price reduction. If we were to put 5% down, our loan amount would be $493,000. Interest rate, according to Mortgage News Daily, 6.38 is the national average on conforming financing. If we look at a payment breakdown, principal and interest would be $3,077. Property taxes on this home are $254 a month. Not bad. Homeowners insurance, $100 a month. Mortgage insurance, so anytime you put less than 20% down, you're going to have some form of mortgage insurance. This is the first. $143 a month. Now, you can apply to have that removed after a certain amount of time or equities established. So not horrible for only putting 5% down, but anytime you put less than 20% down, you're gonna have some form of mortgage insurance. $143 a month. If we add these four numbers together, we get a total payment of $35.75. So the question I always ask at this point is, how does that payment make you feel? And there's no right or wrong answer, but it's a very important question to ask. And if your real estate agent and your mortgage originator are not asking you that question, they should be. So that should be a red flag. The answers are either going to be, Cody, that's right. That's less than I thought. I was budgeting $4,000 a month for a mortgage payment. So the fact that I can get in here under my budget, that's great. Or the answer is, man, that payment terrifies me. I know I qualify for that payment, but it's way outside my comfort zone. Or for all my CPAs and my engineers out there, their answer is, that's exactly what I calculated. So I'm going to go back to Diana here. Diana, go ahead and tell me what you think your buyers, when you see a payment like this, what are some common reactions that you get?
So, right now my buyers it's interesting. Buyers right now are trying to find a good deal, and they're trying to sit underneath a certain price point. I still think that price point's a little on the higher end for some of my pool of buyers. I think that payment is pretty average, to be frank, with first-time home buyers. I mean, that's what first-time home buyers are kind of expecting. The conversation of super low interest rates and wishing that they got in during those low interest rates during COVID, those conversations are have faded. And so, having buyers who are really well educated as to what they can afford, having options like house hacking, like having a roommate to help for maybe the first year or two, there's a lot of options right now. So that price point isn't necessarily a big wow factor.
Great. It's great to get your perspective on that. How's the echoing now? Is my echoing gone? Let me know in the chat. Now, I'm sorry about the audio issues, Diana. We're not going to be able to have a really fluid back and forth conversation, but you and I talked a lot this week about this 50-year mortgage, okay? First of all, right off the bat, I don't foresee this happening, okay? But it's a great talking point, and the reason I think it's such a great talking point is home affordability continues to be one of the number one issues facing our country. So the fact that we're looking at creative financing solutions is never, in my opinion, is never a bad thing. Whatever it takes to get into a home is what I always say. And I know that might sound extreme to say, oh, whatever it takes, but anything that helps you get in a house fixes your cost of living. Just ask the extreme example, just ask the people that bought a home 5 years ago what their payment for their house is compared to if they were to do it today. And that's historic, going back 100 years. The best thing you can do to stabilize your overall cost of living is to fix your housing price. So if going with a product like a 50-year mortgage helps somebody get there, I'm a fan of it. Diana had a different opinion, which is a good concern, is who in their right mind would take 50 years to pay off a house, right? But these tools that are designed for first-time home buyers, and you could say the same like about the Washington State Housing Bond. There's, oh, we have to pay that back, or FHA, I'm going to have the mortgage insurance for the life of the loan. There's cons to all the creative programs that are designed to promote home ownership. But my opinion kind of fluctuated this morning. I came down in the garage to start the live stream. And I'm going to get your perspective in just 1 second. We can't have a fluid conversation, so you're going to have to give me your full answer here in just a second, Diana. But let me explain why my opinion changed a little bit. Okay, so here's what a theoretical 50-year mortgage, if the administration was to put pressure on Fannie and Freddie to come out with this program. Now, keep in mind, the open market can offer whatever programs they want. So the free market may create a 40 or 50-year mortgage outside of Fannie and Freddie. But this is what it looks like. And that's a good counterpoint too. Details what percentage of people actually pay off a 30-year mortgage. More than they used to, because rates went down so low that people were able to get into 15 years. But yeah, we're not talking about somebody that is buying their forever home. We're talking about helping people afford their first home, or maybe their second home. Maybe they need to get out of their little house. Maybe they're being relocated from Illinois and they're stretched thin going to a new part of the country, and they are worried about their housing affordability. I think we're talking about those people, not people that are looking at 10 years from now at retirement. No, these are people that are trying to get in. So this is what a 50-year mortgage would look like. Hypothetical. Same thing, 5% down. The interest rate, I would assume, would be a quarter to 3/8 more than a traditional 30-year fixed. Again, we're making assumptions because this product does not exist yet. So at 6.625, our principal and interest over 600 months is $28.25. Property taxes remain the same. Homeowners insurance remains the same. The mortgage insurance most likely would remain the same. So our total payment is $33.23. So we're only saving $251 a month. Now that is a big deal. That's the difference. That's about $40,000 difference in borrowing power. So if we were looking at two homes for Christine and Mark, side by side here in Astoria, one was $519, the other one was $560. Okay, the payment would be the same on those two homes if we're looking at a 30-year versus a 50-year. So they can go out and get $40,000 more in house. Maybe they need a 4-bedroom, and they can do that with an extra $40,000, and their payment would be the same. So that's one way you could use a program like this or others that are available to help you get you there. I'm going to turn this over to Diana and get her thoughts. But I'm not as big of a fan of this as I was on Monday. And here's the reason why. Okay. I know Diana's biting at the bit to talk, but I'm going to say this and it'll be a good lead off. In this political environment we're in, okay, everyone is so emotional and gets so fired up depending on who says what, and it's entering mortgages, whether it's Trump saying he wants to push for a 50-year mortgage or these new transferable loans he's talking about. That kind of sounds insane too. Or whether it's the Fed chair saying a rate cut in December is not a foregone conclusion. Okay, here's my answer to all of that, is the math never lies. So if you want to take emotions completely out of these ideas of how to fix home affordability, the math never lies. This math, it was more sexy in my head before I did the math. Going to a 50-year mortgage, only saving $251 a month. It's good savings, but I think there's better tools to get there. Okay, I'm going to show you a better tool right after these words from Diana.
Okay, I think I'm good to go without the echo. So the 50-year mortgage, I had a lot to think about this. I know Cody and I talked about this the other day, and I know, the first reaction to a lot of consumers is this is a great option of lowering the monthly payment. But I have two perspectives of this as a realtor and who's somebody who looks on the outside in when it comes to the economic forecasts and looking at the projected numbers and so forth. Besides paying more for a home in the long run, I mean, that's a given, right? The second biggest issue is we still have an inventory issue. So kind of like what Details had mentioned, okay, all these 450 shoppers allows them to go now up to 500. Well, that also is a lot of other shoppers to go up even more. So you have an inventory issue versus a demand issue. So the demand is now going to go up again. Inventory is still going to remain an issue. So now buyers are still going to overpay for a home like they did 3 years ago or 6 years ago during COVID. They're still having to probably bring more money, more cash to the table that they might not have. We're going to have more bidding wars, and it's going to become another seller's market where right now buyers can still get seller concessions, can still get help at the bottom end when it comes to buying down their rate. I think that a 50-year mortgage would open up Pandora's box in, having it become a seller's market again and buyers needing to bring more cash to the table.
I like that we're having audio issues because it forces us to sit and listen to each other and not interrupt. I think that's a really good perspective. But my counterpoint to your counterpoint is there's a lot of incentives and programs out there that could do that. And I'm kind of a rogue here with this opinion, but I think it's going to take a long time for us to have an inventory issue to where people are overpaying, because I believe, I have no facts, this is one man's opinion, that there are more people waiting on the sidelines to sell their home, to where as interest rates come down, and a program like this, a small amount of home buyers are going to take advantage of it. I think what could drive Diana's scenario even further is interest rates falling quickly, like they did during COVID. Good morning, Nathan. When let's say between now and spring break, interest rates fall 1%. Yeah, if we're looking at 5% by April, yeah, we could see buyers coming in, there being inventory problems. But if interest rates continue to improve slowly, I think we're going to have a very healthy market that could sustain more buyers entering the market. The amount of buyers that are out there nationwide now are the lowest it's been in decades. Now, Mark and Christine, if you're still watching, good for you, because here's how I would do it. The 50-year mortgage, all great stuff. It's fun to talk about. It's important to work with good people like myself and Diana that are thinking about these things and understanding how they impact you as a home buyer. You're not just a transaction. You're not just a paycheck. You're not just a statistic. You're a family relocating your entire family across the country. So these are the type of things you want the people you're working with to be aware of. Okay. It's a great point, Diana. Here's how I would do this. If I were in the comment VA, if I were in their shoes. Now, you can do this strategy I'm going to show you with 5% down, 10% down, 15% down, 20, 50, it doesn't matter. And if you're a fan of the channel, this is not going to look strange to you. Okay, so I took the 50-year mortgage option off. And we're going to write a full price offer. We're going to ask the sellers to pay for a 2-1 temporary buy down. Now, 2-1 temporary buy down can be added. It's a loan feature. It's not a loan program. It can be added to almost any mortgage that's available. So this is what it looks like. In year one, our interest rate goes from 6.38. It's reduced by 2% to 4.38. So your first 12 payments will be based off an interest rate of 4.38, bringing your total payment from $35.75 to $29.60, saving you $614 a month for the first 12 months. So that 50-year mortgage, you're not going to keep that thing very long anyways, because you're going to want to refinance into a more typical traditional mortgage. So here, without going with a crazy program like a 50-year mortgage, it, again, doesn't exist yet, we're saving $614 a month for the first 12 months. And that can be huge if you're relocating from across the country, having that grace period of the first year. Now, the second year, your interest rate is reduced by 1%, bringing your interest rate for the second 12 months on the 5.38. I'm reading details. I knew he was going to say something like that. Bringing our payment down to $32.60 a month. So in the second year, we're saving $315 a month for year 2. Now, the way this works is we're going to ask the sellers to pay for this 2-1 buy down. In this scenario, that cost would be $11,154. So that's the charge for the 2-1 buy down, and then here's the seller's contributions. So in this scenario, you're bringing in about $35,000. And I think in this market, getting the sellers to pay for a 2-1 temporary buy down should be a piece of cake. Details, why not do a 2-1 buy down on a 50-year mortgage? I guess you could if 50-year mortgages existed. They don't right now. But theoretically, you could. Okay. All right, let's get caught up on chat here. Scariest thing we have seen at this price point, it is very common to find a decent, nice home in the 200 to 300,000 range. Even with pay increases, it's still a significant jump. Yeah. Welcome to the West Coast. Yeah, going from a market where you can get a house for 200 to 300 to Astoria. Now, I'm not a real estate agent. Diana's, I'm going to speak for, not an expert on Astoria. So I don't know if that house is priced. Normally, I have a bunch of market statistics for the neighborhood that shows the average median price and all that, but I just don't have that for Astoria. I have it for Southwest Washington. But yeah, it's a lot. So here's my call to action, and then I'm going to let Diana talk. I know she's dying to talk more. Here's my call to action. If you want a custom scenario like this for you, if you're out there and you're just wondering, hey, I wonder what it would look like. I've been looking at houses on Zillow. I just want to get an idea. Or I found a house. I'm going to open house this week. I want to know what the numbers are. Just reach out to me. All my information's in the description, loansbycody.com. And I'd be more than happy to put one of these scenarios together custom for your scenario. Can you run a 15-year 2-1 if you anticipate refinancing at a 30 in 3 years? Not sure if that's possible. Okay, Diana, you're up. I'm going to let you talk, and I'm going to show what a 15-year on a 2-1 buy down is going to look like.
Thank you, Cody. Yeah, I do the 50-year option. There's a lot of other conversations right now with regards to affordable housing and mortgages. The newest term is portable mortgages, which Cody kind of hit on, where I can take my interest rate of my house and move it to another home. I don't know what that would look like in hindsight, but by moving either interest rates and or a 50-year mortgage, allowing buyers who buy the buyer pool to increase, we see this. I look at it as a checks and balances, where sellers now will have the upper hand. Buyers will have to pay over asking. The seller incentives are not going to be as viable or available for buyers to get, say, that 2-1 buy down or help towards closing costs. When I have conversations with my buyers right now, my conversations are, hey, sellers who have their homes on the market right now need to sell. And, they're willing to look at any respectful offer that comes their way. Holding out on something quote unquote better is not necessarily the game we should be playing, because well-educated sellers who have agents like myself who are educating them on the economic forecast and having these conversations with potential rate differences when it comes to like a 50-year mortgage or a lower interest rate and or again portable mortgages, a lot of my sellers are waiting to pull the trigger when they have the upper hand. And so in hindsight, buyers won't have the upper hand when that happens, right? Seller incentives are not going to be available for those buyers who need a little help on purchasing a home.
And that's a game.
Right now is a great time to buy. If you can get that 2-1 buy down, either 30-year or 15-year, get some extra help, because if rates do come down, say next spring, they can refinance to that lower rate, right? So my concern with all of these extra terms and extra options that might be circulating in the industry is
Diana.
Really for my buyers, right? My sellers will gain. Oh, hi, Cody. Sorry.
It's okay. I'm going to interrupt you. You're doing a great job. I'm going to interrupt you. I'm going to ask you a question, and then I'm going to come back to you, and then we're going to end with your answer. Okay. What you were saying just then, the reason I interrupted you is because you're talking about playing a game called Catch the Falling Knife. Oh, I'm waiting for this to happen in the market before I get in. I think there's going to be a better opportunity in 6 months. I think the market's going to crash. I think rates are going to go down. I think rates are going up. I think there's going to be a global pandemic, blah, 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 blah. You're trying to catch a falling knife, and that's where you get cut, right? You got to make the best decisions with the information you have at the time and pull the trigger when the right opportunity presents itself. I'm going to go over the 15-year fixed mortgage. Diana, what is your parting words of wisdom and advice to Mark and Christine, or to anybody that's looking to relocate, maybe to Astoria or to Southwest Washington in this market during the winter? Give us your little piece of advice to home buyers like Mark and Christine. Think about that. I'm going to come to you to end. Here's what the 15-year fixed mortgage would look like. Except there's a mistake. Hold on. So if we put 20% down this scenario, typically if you're putting 5% down, I guess we could do the math to see if it would make sense to do a 15-year, but let's say you're putting 20% down, your loan amount would be $415. Interest rate on a 15-year fixed national average today, 5.86. $39.47 would be your total payment. Actually, that's wrong. I have mortgage insurance in there. Let me get rid of that mortgage insurance. We're live, everybody. Okay, so your actual payment without the mortgage insurance, $38.26. So $38.26 on a 15-year mortgage. Now, if we added the 2-1 temporary buy down, the first year, the first 12 months, your interest rate would drop down to 3.86. Are you jealous that everyone got a 3% interest rate during the pandemic? Now's your opportunity to lock one in for the first year. I haven't said interest rate that starts at 3 in a long time. Okay, so you can go get a 3% interest rate. It's only for the first year, but you can get an interest rate that starts with 3%. Let me show you what that total payment would look like. So you're saving $430 a month for the first 12 months, and then your interest rate would go to 4.86 in year 2, saving you $219, and then years 3 through 15, you'd be at the full 3826. Okay, Diana, take us home.
Oh, let me mute my computer. So to answer your question with regards to relocating, really relocating the Pacific Northwest, whether it's Astoria, Southwest Washington, relocating around this time in the area, there's a lot more leverage for buyers. There's less competition, therefore way more negotiating power. I just have firsthand experience right now with 2 of my buyers, which is great for them. You also get kind of what I would call like an honest look at the home. It's kind of rainy season, so you want to see how the yard drains. Is that home inspectors can see leaks in the roof if that is happening. You can see if windows are, if there's drafts, or how efficient the home is during this time of the year. It's a great time to buy for really a lot of reasons like that. You'll be surprised how many buyers buy in the summertime, and because it's dry, they don't see some of those issues arise until the fall, winter time. And they're like, well, that wasn't on the inspection. Well, of course it wasn't, because nobody would see it, right? Nobody's just going to pour water on a house to see if things leak or they don't drain properly. And with the conversations that Cody and I are having with the unpredictability of rates and all of these terms coming out over the last week or two, at the end of the day, these what if scenarios are really, we can't really buy into them, but what we can do is understand what the now is. And the now is buyers have a lot more advantage with rate buy downs where sellers can pay into that. There's assumable loans are something of conversation topics. I was just having this conversation with Cody. I've got 3 assumable loans I'm going to be putting on the market. And right now lenders are offering a refinance guarantee. So when rates drop, say in 6 months to a year, you can refinance down to that preferred rate. And right now, prices, I talked about how there's not a lot of competition right now. Also prices tend to level out this time of year. Like I had said earlier, sellers who have their home on the market need to sell. And so there's a lot more wiggle room for buyers to come in and grab a decent deal. I think I kind of tackled all that.
I think you did a great job. I think you did a great job, Diana. All right, before we take off here, we just want to answer a question in chat. Where was it? Not being from the area, do you have any recommendations of the best place to live within driving distance to Astoria, Warrenton, and Seaside? I think I can answer this question because I spent a lot of time here. I think all 3 of those would be good places to live. Astoria is super cool if you want to live in a kind of not a touristy area, but a historic part of the West Coast. Astoria is a great place to live. If you want to be a little closer to modern conveniences like a Walmart, Fred Meyer's, Costco, then Warrenton's a great way to go. Seaside's also great. It's going to be a little more expensive, but all 3 of those are within 30 minutes of each other. So I don't think either one of those 3 would be a bad solution. Now, do you like living in old towns? Astoria is a super old town. That home was built in 1898. Or do you want a new build, new construction? You're going to have an easier time finding that in like Warrenton area. Okay, if you made it this far, thank you so much dealing with our amateur hour audio problems. I'm going to make sure all of Diana's information is in the description if you want to reach out to Diana. Even if you're relocating to another part of the Northwest, she's a great resource. If she can't help you in that part of the Northwest, she can refer you to somebody that can. But just a wealth of information, somebody that really cares about her clients and judges her success on how happy people are years after they buy. reach out to Diana. All my information will be in there too. Diana, thank you so much. Everybody, go out and enjoy your Saturday. We'll see you back here next week without the audio issues. And we're going to be talking this week about DSCR investment properties. We're going to be talking about assumable loans, so stay tuned to the daily videos as well. Bye-bye, everybody.